U.S. property casualty industry results through the third quarter of 2024 showed significant improvement, driven largely by a turnaround in the personal line segment. Here to discuss a new report is David Blades, Associate Director, Industry Research and Analytics, AM Best. And David, how did personal auto and homeowners insurers perform through the third quarter of 2024?
Well, through the third quarter, both lines saw market improvements in terms of, top line premiums. I think, from the homeowners perspective, we saw almost 12% increase in premiums and double digits as well for the personal auto side. And what we really saw was the manifestation of, a few different things that impacted both lines. On the personal auto side, there has been a push for more adequate rates and improved pricing segmentation, and both of those things have really manifested over the last couple of years and really started being seen in the direct results through the third quarter. And so we see that momentum as having, propelled that particular line of business to better results in the third quarter or through the third quarter of 2024. And we saw similar things in terms of the initiatives that homeowners insurers have put forth in terms of trying to improve their results as well. And we saw that, again, noticeably improved direct loss ratios for homeowners as well. The homeowners results included the impact of Hurricane Helene, but didn't include the Hurricane Milton results yet, because that happened right at the beginning of the fourth quarter. We expect Hurricane Milton to have more of an impact on fourth quarter results and on homeowners results overall, because of where that storm made landfall as compared to the Panhandle area where a Hurricane Helene made landfall, where there was, in terms of insured losses, there was less of an effect on the industry from Hurricane Helene than Hurricane Milton. But we do think that the improvement that we've seen has been coming, and we think they'll have a decided effect on full year results for the industry.
Yeah, I was going to ask, do you think that the third quarter is a harbinger for good things yet to come for full year results?
What we've seen on the personal line side is definitely momentum that we think will continue to benefit the overall industry on a going forward basis. And that's one of the reasons why during the fourth quarter we revised the outlook for the personal line segment from negative to stable, because again, we see the benefits of the concerted push for more adequate rates and premiums specifically on the personal auto side, but also on the homeowner side as well. We see the continued benefits on the homeowner side from companies doing a better job in terms of catastrophe management. We see just from an underwriting standpoint, companies making putting initiatives in place that have also improved their results through the third quarter, and particularly driven by those two lines, would be beneficial to the industry for overall 2024.
Were there any PC lines that didn't perform as well in last year that have in recent years?
So I think one of the things that we've seen on the driver on the commercial side for the positive results that we've seen from a commercial line standpoint has been the workers' compensation line. One of the things that we've also seen is that rates have been trending, little by little, downward in the workers' comp arena. Not drastically, but we did see a 1.4 point deterioration in the workers' compensation third quarter direct incurred loss ratio compared to 2023. So we did see a little bit of negative trend in that respect. And again, that's meaningful only because that line has been the driver for the positive results last few years. I would also say the two general liability lines, whether it's a general liability occurrence or claims made, both of those also saw increases or a worsening from the standpoint of their direct incurred loss ratio. So I think some of the factors that we've talked about in our research reports and that we've talked about and focused on in terms of our management of the or our dialogue with the companies that write those lines, social inflation, litigation, financing, just overall medical cost inflation that are impacting some of the bodily injury claim results. We've seen things kind of deteriorating from that standpoint. So we think those are factors that we'll continue looking at and how they'll impact those particular lines. So I think workers' comp and then the two general liability lines, even the surety line of business, which again, very consistent and steady from the overall PC standpoint, had some deterioration through the third quarter. So again, that's a line that we'll look at. But to mention the lines that didn't do as well, whereas we talked about obviously homeowners and personal lines, personal auto faring much better. Those are some of the lines that were on the negative side in terms of when you compare third quarter 2024 to 2023.
Thanks, David.
You're welcome, John.
That was David Blades, Associate Director, Industry Research and Analytics at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.